Welcome, everyone, to week 11 of our financial support group, Coping with COVID. I hope you are all doing well. Today is Monday, June 8th, and it has already been quite a month already. I am so comforted and overjoyed by some of the tangible progress and policy changes that have gone into effect following protests over the past week plus or so. And I hope you all are staying safe and staying hopeful and optimistic and taking really good care of yourselves and those around you. It is a tough time, to say the least, and it seems like every new week brings a new nuanced form of challenge. But I will remind you that how we spend our time and how we spend our money is a direct reflection of our values. And I've been trying to keep that in mind as I am choosing organizations to support right now and also prioritizing how I am spending my time. So I hope you all are doing the same and taking really good care of yourselves. We have a handful of things to talk about today, not least of which is the new PPP legislation that was signed into law on Friday. So we'll talk about some things with respect to that, and then also save some time for any questions you may have. I make liberal use of the chat feature within Zoom. In fact, several of you have already sent me private messages saying hello. Hello to you back. It's lovely to see you and see so many familiar names and faces. So if you would like to put any questions in the chat, you can certainly put them there either to the group as a whole, or if you'd rather send them to me privately, that is perfectly fine as well. Of course, this is being recorded and the recording will be shared with everyone who has registered for these groups so far. For those of you that don't know me, my name's Elaine. My background is in finance and accounting, and all of my work is with creative individuals and groups all around the country. And lately, I've been talking a whole lot about PPP and unemployment and managing cash flow and the uncertainty around what the arts sector is going to look like over the next couple of years or so. And I'm appreciative to all of you for contributing to those conversations. Of course, all of these sessions are for educational purposes only. You know as well as I do that the rules have been changing regularly when it comes to the legislation and the guidance that's going on right now. So definitely know that this is for educational purposes only. So I thought today we would start with the new PPP forgiveness legislation. Again, that was signed into law on Friday. We also have a couple of unemployment updates for Arizona and North Carolina by popular request from this group. And then I wanted to end with a little bit of a spending check-in. Now that we are starting the second week of June, it's not a bad time to be looking back at May and seeing how your spending is going right now. You probably would not be surprised to learn that many Americans are spending less right now than they normally would. So I wanted to check in on that and just give you a gentle reminder to maybe be cognizant of what you are spending right now and how that's going to impact your year for the rest of 2020. So this new PPP legislation, it was signed into law on Friday, and it is called the PPP Flexibility Act of 2020. So there are two really important pieces to this legislation. First of all, many of you who received PPP funding know that you needed to spend that money within an 8-week covered period. This new legislation extends that covered period to 26 weeks rather than 8 weeks. So that's some good news for other non-payroll expenses, especially rent or utilities. And if it's payroll you are incurring to pay other people, that 24 weeks can be really helpful. If it's your own payments because you are a single member LLC or a sole proprietor, right? The extended period helps you with respect to your rent and maybe your utilities, but not your payments to yourself. The next big part of this legislation, and this does help some of us, is the idea that the new threshold for how much of PPP funding you have to spend on payroll is now 60%, not 75%. So that's good news. It introduces a bit more flexibility. One thing that did not change, what you can pay yourself. So again, if you are a sole proprietor or a single member LLC or a freelancer or just anyone who has been enrolled in making money in any sort of way and you received PPP funding, the maximum amount you can pay yourself is line 31 from your Schedule C from last year divided by 52, so that average weekly amount times 8, right? So the maximum amount you can pay yourself is still 8 weeks worth of average income, right? This new legislation doesn't change that at all. So how do you make PPP forgivable? At least one question specifically about this came through when people submitted questions in registering for today's event. And I fielded a couple of other questions about this via email. So I think it's a great time to dive into some of those requirements, especially in light of the new legislation that passed last week. So how do you make PPP forgivable? First of all, you're going to apply for forgiveness from your bank. So the counterparty to the loan that you went through when you submitted your application, that's the financial institution we're talking about. For most people, it's a credit union or a local bank. It could be a national bank. It also could be a company like PayPal or Square. But that's your counterparty, and that's the company that's going to be deciding if your loan is forgivable and how much of that loan is forgivable. So there's an application posted online. The link is there. You're welcome to take a peek at it. I would also poke around your financial institution's website. There's a chance that they have posted their own version of this application. It's basically going to be the same thing, but it's also possible that they have posted a portal where you just directly enter this information. So that can save you some time if that's how they prefer for you to submit this. The amount you can pay yourself, right? So if you own your own business, the amount you can pay yourself cannot be more than 8 weeks of your average payroll. That has not changed. And I'm saying this a couple of times because this was really wonky, right? Because you remember your application for PPP was based on your average monthly amount, right? From Schedule C of last year. But forgiveness is based on the weekly amount. And it doesn't seem like a huge deal, but for a lot of individuals, it throws things off quite a bit, right? Because I'll forgive you, I'll spare you the math that goes on behind this, but basically, if you're looking at a monthly amount and we're estimating that there are 4 weeks in every month, that's basically getting you to 48 weeks during a year, but the forgiveness is based on 52 weeks. So if you back into the math, that's a little bit less than you would be able to do. And yes, I can absolutely share that link again. And I will also share a copy of the slide deck will be emailed to you afterwards. So definitely if you need it later, feel free to go ahead and snag it. And I can go ahead and put that in the body of the email as well. So remember, pay whatever you're going to pay yourself, still based only on 8 weeks. That's a big deal kind of thing. And that's a maximum. You cannot pay yourself more than that amount. And if you figure it out and that amount comes up above $15,000 and some change, you can't pay yourself more than that amount either, because you can't pay yourself under PPP more than $100,000 a year. So what does that look like? If you'll remember to a couple of weeks ago, someone had shared an example. He received PPP funding, right? And he applied and received $1,987 of PPP funding. And this was based on his line 31 of Schedule C showed $9,500 or so, $9,539. So what he based his application on was exactly right, 2.5 times of the monthly amount of that line 31, but his forgiveness can only be $1,464 of payroll to himself. And that's based on that 8-week amount, right? So he was understandably a little annoyed because he had no intention of paying back PPP. He wanted it all to be forgivable, and he thought he had taken all the right steps to make it forgivable. So if you remember a couple of weeks ago, we said, okay, here's an issue. What does that mean, right? And so this individual had a small portion of the amount he calculated as his payroll that was not forgivable, right? So what we did is we said, okay, this amount wasn't going to be 75% of his total PPP. So that's a problem. So one solution was to pay back the little extra bit that wasn't going to be forgivable for him. Now, because of this PPP Flexibility Act, since the threshold is now 60%, this individual is okay. right? The amount based on 8 weeks that he's paying himself is totally forgivable. He meets his 60% threshold for PPP forgiveness, right? And he's just fine. So as long as he pays himself this amount or up to this amount, right, then he can spend the rest on any qualified expenses that are eligible for PPP funding. And those qualified expenses are rent for your business property, mortgage interest on any business property you have, and utilities. Utilities are defined to include electricity and gas and internet subscription or usage, right? But not necessarily defined more broadly than that. So on the one hand, this is really good news for this person because he now does not have to pay back that extra little portion, right? There's a little bit more flexibility. The second issue he was dealing with is that he didn't have any other qualified expenses. He didn't have any rent, didn't have any utilities, nothing like that. So his follow-up question was, okay, I have a whole lot of other expenses. Could I use PPP on that? And the answer is no, right? That is not going to be a forgivable expense. So the solution was to pay back whatever was not a forgivable part of the loan. And that is still what I would recommend. Generally speaking, you want to try to comply as best as possible with the letter of the law when it comes to PPP. So that means you spend up to 8 weeks of your average 2019 income to pay yourself, and then the rest you can spend on those qualified business expenses, which again, generally for most individuals I work with is studio rent or an office rent or something like that, and utilities on that space. So if you don't have any other qualified expenses, you're probably thinking about paying back some of that money. That money, the loan you took out as a PPP loan, started accruing interest immediately when you got the money, but it's only 1% per year, which is very, very little, right? So there are a couple of different ways to pay it back. Thank you for that question in the chat. One way would be to contact your lender and say, hey, I'd like to pay back some of my PPP funds right now. And then you could transfer that money to them. I wouldn't just transfer it to them without having a conversation because they might get confused or not be totally sure how to apply it. The other way is when you apply for forgiveness, if you're not really concerned about the interest, being that it is 1% per year, probably not a huge amount depending on how big your PPP loan is. If you're not really worried about that, you can apply for forgiveness. And then when you receive confirmation from the bank of the amount that is forgiven, you can just pay back whatever has not been forgiven immediately after that as well. Okay, so let's pretend, going back to this person's example, now he's good, he's got, the amount that he can pay himself that meets that 60% threshold. But now he says, okay, I do have some other expenses, but my rent is only $200 per month. So that's not going to be enough to spend the rest of my PPP money. Here's another moment where that Flexibility Act that was signed into law on Friday can help this person, right? Because now you have 24 weeks to spend the PPP money, not just 8. So for this person who doesn't hire any other employees, his only payroll is what he pays himself, right? Now he's got essentially 6 months or 24 weeks to spend money on these other things. So for him, if he did have rent or utilities, he's got a little bit more time to have enough of those expenses to use up the rest of his PPP money, which is a good thing, right? This definitely gives you more flexibility to spread some of those payments over time. And if you are someone who does employ other people, you're looking at your payroll expenses for a 24-week period as well. For individuals paying themselves, you're still capped at 8 weeks. But if you pay other people, not as contractors, but as employees, you do have a little bit more flexibility there. This particular provision of the law is especially helpful for retail operations and also restaurants and bars. So any of those businesses that may not have been able to fully reopen during the 8-week period, this allows them to spread some of those expenses over 24 weeks instead of just 8. And for individual artists and creative individuals, it allows you a little bit more flexibility on some of those non-self-payment expenses as well. So let's pretend my musician friend who submitted that example, right? Let's pretend he says, oh, great. I definitely want to put as much PPP money as possible toward my rent, and then I'm just going to pay myself the rest, right? I would say, be careful because if he were to do this and spend $200 on rent for 24 weeks, which would cover a 6-month period, he'd spend $800 on rent, which is awesome. And then the remaining amount, $1,187, he would take as his own payroll for that period. That's presented here as option 2 on the screen. Here's the problem with that, though. If you look at those percentages, all of a sudden his payroll percentage is not hitting that 60% threshold, which means, based on a literal reading of the law that was signed into law on Friday, the literal reading would say none of his PPP is forgivable. Now, obviously, we don't want that to be the case. So my guidance to this individual would be, don't spend $800 on your rent, right, from PPP. Obviously, keep paying your rent if that's part of what you're going to be doing, right? But either follow option 1 and prioritize what you're paying to yourself, because you can maximize that for forgiveness. That would be $1,464 for this individual. And then the rest you can spend some on rent. And, you know, if you have $200 per month on rent, that's essentially covering 2 months and a little bit of the 3rd month, and that would be totally fine. If you wanted to play with the numbers a little bit more, you're welcome to play with them, especially if you wanted to prioritize paying some of those other expenses, but just be really careful that you are making sure you are meeting that 60% threshold, right? Because 60% of your PPP money must be spent on payroll. And for individuals, this is defined as your average weekly earnings based on your 2019 Schedule C. Here's a little small caveat as well. About an hour ago, I got an email alert that the Treasury had come out with some guidance that softened some of the language in the legislation. So Treasury's guidance says, okay, if you don't hit this 60%, we are not going to make none of your PPP forgivable. We're just going to reduce the amount that's forgivable. I felt really good reading that guidance because that's kind of harsh, right? If you don't meet that threshold, then none of your PPP is forgivable at all. And yet that's how the law is written. So I would say a lot of people are sort of in this weird holding pattern where if you follow a very literal, strict reading of the law, you want to make sure you're hitting that 60% threshold. If you're following guidance from Treasury, you might have a little bit more flexibility. My advice for you, so that you could sleep well at night, is go ahead and meet that 60% threshold. Don't mess around with it, and then go ahead and move on. Question in the chat, for PPP, does health insurance count? So interesting. No, not necessarily. We want to, you have to read through sort of very specific questions related to this. And for self-employed individuals, it is more limited. So I would not count health insurance as part of your payroll costs. And then follow-up question in the chat is 6 months rent, $1,200. Yeah, in this example, that would be the maximum amount that he could spend on rent over that 24-week period. But again, that would put him in an even worse position when it came to forgiveness. So he wouldn't want to do that. Follow-up question or a second question, do lenders understand how to forgive loans? PayPal is your lender and they seem impossible to contact. I'm sorry, I apologize. So yes, kind of. Lenders are receiving this guidance at the same time that the rest of us are. They're not getting sort of advanced versions of this, unfortunately. So The House passed this legislation early last week. The Senate passed it on Thursday, and then it was signed into law on Friday. So the lenders have had, the weekend or so to dig through all of this and figure out how they're going to apply these rules. Now, I can't imagine any of them are ready to accept application forgiveness today, right? It's going to take them a minute to kind of work through everything and require or figure out exactly what documentation they want you to submit. So I would say pay attention to whatever's coming out from your lender. I imagine it is probably very difficult to contact any lender right now, especially PayPal or Square or anyone that's not a community bank or credit union. And even those institutions are sometimes a little bit hard to get a hold of. So I would say what you can be doing is get a sense of what your PPP number is, how much you borrowed, right? Figure out the maximum amount you can pay yourself based on your Schedule C, and then figure out what the minimum amount you have to pay yourself is. So that would be 60% of your total PPP. If you have a sense of those numbers, then you can be prepared to either decide if you want to get ready to pay back some of the PPP money. And if that's the case, definitely don't spend it. Or if you have some of those other eligible expenses, then you can save checks or transfers that you made to your landlord or payments you made to a utility company or your internet provider or something like that. So you can be kind of gathering your receipts for that particular, those particular types of transactions, and you can be doing the math just so that you know kind of your own parameters. But other than that, you do kind of have to wait until your lender is ready to receive those applications. And again, since legislation was only passed on Friday, I'd give them at least a week, and it might be longer than that. Okay. The next issue, and I feel slightly bad bringing this up, but I think it's important that you're at least aware that this exists. There are some questions around whether expenses you are funding with PPP money are going to be deductible for tax purposes. The reason this is an issue is because there's some conflicting perspectives among our lawmakers and Treasury officials and everyone else in the world, including the IRS, that says, okay, we want PPP money to be not taxable to the recipients. So let's pretend you borrowed $1,000 and you're going to spend it all on qualified expenses. You're not going to be taxed on that $1,000. And so you, in theory, should not also be able to deduct those expenses, right? Because the IRS likes to have matching things, right? If you're taxed on the income, then you can take a tax deduction for the expenses. But it seems like too big of a benefit to the IRS to receive tax-free money and then also get a tax deduction for those rent payments, for example. So that's what the IRS has said. Some of the legislators that were involved in crafting this legislation say, no, we want to give these benefits to small businesses. So we want all of these expenses to still be deductible. So if we go back to our musician example, right, the musician might want to think about not necessarily maximizing rent expenses with PPP money, right? Even though it looks cleaner because you've got a canceled check or an invoice or a contract or something, right, that shows that expense pretty clearly, right? But if that now becomes not a deductible expense, maybe we don't want to spend PPP money on that, because you can't deduct payments to yourself anyway, right? So maybe then that puts us back closer to option one, where we want to maximize what we're paying ourselves. So this is where it's getting a little confusing and a little dicey. The PPP Flexibility Act on Friday did not address the tax deductibility of these expenses. A lot of people were disappointed and yet not surprised that it didn't address that, but we expect additional guidance in whatever next round of legislation there is. So know just in the back of your mind that there is a chance that there's going to be some deductions for ordinary and necessary business expenses that you can't claim next year if you funded those expenses with PPP money. So just file that away so that if your tax preparer tells you that, or if you get a question like that when you're filling out TurboTax or Tax Act or Free Tax Online or any of those other programs, there's probably going to be a question about that comes up. And hopefully it'll be a good resolution for everyone. Then, if we were to just kind of simplify this, I think I touched on this a couple of questions ago, but basically, you know what you got for PPP, right? You've got the paperwork, it shows how much you received. The two numbers you need to really make sure to pay attention to is what is 60% of that amount you received, because that's the minimum amount you have to spend on payroll, either to pay other employees or to pay yourself. That's the minimum. So definitely make sure you're meeting that. The next number you need to make sure you are aware of is your 8 weeks worth of salary that you're going to pay yourself. And again, if you are a single member LLC or you are a sole proprietor or just a regular old freelancer, you're looking at Schedule C, line 31, and you want to take that amount divided by 52, that's the average weekly amount, and then multiply that answer by 8. So that's the maximum amount you can pay yourself, right? As long as it's under $15,000 and some change, right? So make sure you have a sense of 60% and then a sense of that maximum amount. And as long as your payroll is falling somewhere in there, you'll be totally fine for forgiveness purposes. And then the rest of your PPP money, you can spend on some of those qualified expenses. Okay, I'm going to pause to see if there are PPP questions coming up. I don't see any more in the chat, but that doesn't mean someone isn't typing right now. The next thing we're going to do is switch gears to talk about unemployment. Don't see any more questions. So I'm going to go ahead and start talking about unemployment. I wanted to kind of remind us of some of these terms because they are coming up again to haunt us. Remember, pandemic unemployment assistance, that's that PUA piece of the CARES Act. That basically says unemployment extends to cover more individuals, right? So this is why self-employed individuals and freelancers are now eligible for unemployment through PUA. The next piece is Federal Pandemic Unemployment Compensation, FPUC. That's that extra $600 that everybody who is getting unemployment, either through regular old unemployment or through pandemic unemployment assistance, anyone who's getting that right now is getting an extra $600 a week, and that's because of FPUC. That amount continues through the end of July, and then that extra $600 per week ends. Then the third piece that is becoming more and more relevant is Pandemic Emergency Unemployment Compensation, PEUC, Pandemic Emergency Unemployment Compensation. This is the piece of the CARES Act that extends regular unemployment benefits from the normal 26 weeks, which is normally the maximum amount of weeks you can claim unemployment. It now extends it to 39 weeks. What's interesting about this is that we are starting to see states are starting to ask anyone who's on unemployment, who has exhausted their regular benefits, to reapply for pandemic emergency unemployment compensation. I happen to think that is stupid and a colossal waste of time because this automatically extends those unemployment benefits. So in my mind, the simpler fix would simply be to extend those unemployment benefits for 13 extra weeks. However, we're starting to see some states asking people who have exhausted their first 26 weeks of unemployment benefits to now reapply. So if you are someone who is on unemployment, you may find yourself being told that your benefits have been exhausted and now you have to reapply for an extra 13 weeks. Don't panic if you get a communication like that from your state. In a perfect world, it would just continue seamlessly. But if we know anything from 2020 just in general, we are living in a vastly imperfect world. I bring that up because both North Carolina and Arizona addressed that on their websites, which I thought was really interesting. 4 weeks ago, when we were digging into other states' unemployment's websites, none of them were talking about reapplying for that extra 13 weeks. So this is sort of a new development over the past month or so, probably because now is when a lot of those 26-week unemployment benefits are starting to run out for anyone who was on unemployment, several months ago. So for those of you that live in Arizona that asked me to dig into the Arizona website, here it is. This is what your unemployment website looks like, and it is linked there at the bottom. Here is one of those updates that I mentioned that started showing up on some states' websites. PEUC, which provides an extension of unemployment benefits, will be available in Arizona on June 6th. So the application for this opened this past Friday. So if you are someone on unemployment in Arizona and you are reaching your 26-week limit, you might be asked to reapply under this exactly the same but slightly different program. So what are you supposed to do in Arizona? There is a special page for pandemic unemployment assistance. This is for self-employed freelancers that are now eligible for unemployment in Arizona. The way Arizona's system works is that you are probably going to have to be rejected for regular unemployment before you apply for PUA. Again, it's just an annoying quirk of how some of these systems are set up. You will know you are complete or your application is complete when you get your confirmation number, and then Arizona will snail mail you all of the information you need, including a determination of your benefits. So make sure you're watching for your snail mail because that's how they are going to communicate things to you. A question from the chat: if you don't get unemployment insurance and you are on commission, can you get your $600 in Arizona? Let's see, if you do not get unemployment and you do not get pandemic unemployment assistance, then you cannot get the $600. You have to get at least $1 in unemployment compensation, either under the regular system or the pandemic unemployment assistance, in order to get your $600, which means if you earn some money in a given week in Arizona and you earn enough so that your weekly benefit for unemployment goes to zero, you would also lose out on that $600 for that week. In the Arizona application, and we're seeing this in other states as well, there's a COVID-19 identifier. So when you're applying, the application will say, why are you unemployed? And there's an option to choose COVID-19. To apply for unemployment, you need 18 months of income history in Arizona. That's a long period of time. Most states are asking for 12 months worth of history. Arizona wants 18 months of history. One of the challenges I saw on Arizona's website is there is no specific guidance for what you need to apply for pandemic unemployment assistance. Most states are asking for tax forms, so your Schedule C from last year, or 1099s, or contracts you had with someone, right? So if you've got that information, go ahead and get it ready. So tax forms are definitely going to be a good bet for you to make sure to have as you are going through this process if you live in Arizona. Your extra $600 is going to be automatically included in your benefit each week, which is great. And if you have exhausted your regular unemployment benefits, so that 26-week period, you are going to be asked to reapply for the extended time frame, which is, again, kind of frustrating, but know that that could be on the horizon for you. In Arizona, your benefit per week can be up to $240. That's the regular unemployment benefit, and it's based on a percentage of your previous earnings. And then the $600 goes on top of that. So if you were earning no money and you earned the maximum amount to qualify for your maximum unemployment insurance benefit, you would get $240 per week plus $600. So it would be $840 per week you would get as long as you were unemployed until that $600 runs out at the end of July. You do need to recertify eligibility for unemployment each week. Do that online through the portal for Arizona. And you can earn money while you are on unemployment. As part of that recertification process, Arizona will say, did you earn any money this week? And then you would report whatever earnings you had. And you can earn up to $30 per week without it affecting your unemployment. But if you earn more than that, it will start reducing your unemployment benefit. And then if you earn more than the total unemployment benefit, you obviously won't get unemployment for that week, and you'll lose out on that $600 additional payment. You do not have to be actively looking for a job, and there is not a waiting period to go through the process in Arizona. You'll remember under normal circumstances, when we're not in the middle of a global pandemic, you normally have to wait at least 1 week of being unemployed before you apply. That has been suspended, and the guidance has been that it should be suspended in all 50 states. All the ones we've looked at right now have suspended that waiting period. In general, in Arizona, after you apply for unemployment, it usually takes about 21 days to get your benefits. It is seeming to take a little bit longer right now, so Arizona is asking that you remain patient. And then for those of you in North Carolina, this is what your website looks like. And shout out to North Carolina because the translate function on this page has more languages than I've seen in any other state so far. So I appreciate that inclusivity effort from the state of North Carolina. So what do you have to do? You have to create an account. The website is des.nc.gov. And then in North Carolina, as we've seen in other states, they want you to apply for regular unemployment and then apply for pandemic unemployment assistance if you're not eligible for regular unemployment. You would choose coronavirus as your reason for unemployment. Again, this is similar to Arizona when we saw that special identifier. The identifier is coronavirus in North Carolina instead of COVID-19. There is some special guidance that the department in North Carolina has shared. They have a special COVID-19 resource page. So I would encourage you to check that out, visit it, poke around, make sure you get a sense of kind of all the questions they should be asking you to answer. Because if you have an idea of what they are before you start the application, it'll be a little bit easier to get through. They also have a tip sheet. It's just a 3-page PDF file that basically reproduces the information on the website. But if you want to print it out and have it in paper, it's a good way to do that. And there's a dedicated phone number for pandemic unemployment assistance. So if you are someone that is not eligible for regular unemployment because you are self-employed, then you might find guidance from this particular phone number more helpful than general unemployment guidance from the website. North Carolina asks that you prove your income. They suggest your 2019 tax return, pay stubs, bank statements, 1099s, contracts, all of that stuff could be used to prove your income for unemployment purposes. And so that's going to be good information for you to gather as you're preparing to file. And that extra $600 is automatically included in your weekly benefits for both regular unemployment and pandemic unemployment assistance. I know a couple of weeks ago when we first talked about North Carolina, someone had shared, I believe in the chat, that they didn't think the $600 was being automatically included. North Carolina's guidance says it is being included, and it is being included automatically. You don't have to do anything extra to get your extra $600. So I would encourage you, if that was an issue for you, maybe to dig in a little bit, maybe even by calling that dedicated PUA number if you're on pandemic unemployment assistance, so that you can make sure you are getting all the benefits you are eligible for. In North Carolina, just like we saw in Arizona, you can apply for that extra 13 weeks of unemployment when you run out of your regular benefits. It is not automatically extended. The maximum unemployment is $350 a week in North Carolina, plus you get that $600 through the end of July. And in North Carolina, you can earn up to 20% of your weekly benefit without reducing the amount you get. And then when you earn above 20% of your benefit, that's when the benefit will start being reduced. A clarifying point was made in the chat that says the unemployment office is not withholding tax from the additional $600 you're getting. That's a fantastic point. So we know that unemployment benefits are taxable to you, right? So at the end of the year, the government in your state will send you a 1099 that shows you how much in unemployment benefits you were paid, and you can request that your state withhold taxes from that amount. But this person is making the point in the chat that taxes are not withheld from that additional $600 amount. So definitely file away in your brain that that's going to be counted as taxable income to you. So you want to make sure that if taxes are not being withheld, you are setting aside enough to cover those taxes. The general advice I give to people is to set aside about 30% of what you earn for tax purposes. For some individuals, they pay considerably less than that in taxes. Other individuals pay considerably more. I find that 30% tends to be enough to cover all your state, local, and federal level taxes without keeping you up at night. So that's not a terrible rule of thumb to follow if you are looking for a good thing to hang on to. A follow-up question in the chat. Do you need to set aside 30% of that $1,200 stimulus payment you got? Great question. No, you do not. It's super weird, and I apologize on behalf of my entire profession because we geek out about this stuff and it just seems confusing to everybody else. But that $1,200 economic stimulus, economic impact payment, I forget the term of art they used, but that $1,200 is basically a tax credit that you are eligible for on next year's tax return, and they just paid you that credit in advance. So that is not taxable income to you. It is a refundable credit. So you don't have to worry about the 30% on that $1,200 amount. Great question. Also, follow-up point on that $1,200 amount. I was in a 4-hour tax training today, which is why I am a little bleary-eyed right now. But during the tax training, someone asked if the experts on the panel, and these were tax leaders and experts from various tax agencies across the country, if they expected additional stimulus payments to be made. There was no consensus. There has been chatter among our lawmakers around a second round of stimulus. That would be another $1,200 payment going to individuals. Most of the experts today did not think that was going to happen. One or two were fairly optimistic, especially if the economy still felt a little depressed going into the fall election season. So I would not plan on it if I were you. I don't necessarily think that's going to be a thing, but we can always hope. Okay, back to North Carolina. Yes, you do have to certify that you are still eligible for unemployment on a weekly basis in North Carolina. North Carolina says you do need to be actively looking for a job. In most states, they have suspended this requirement. I couldn't find anywhere on North Carolina's website that it explicitly stated that you did not have to be doing this. So I would say proceed with caution there. And then the waiting period has been suspended, and normally you get your benefits in about 14 days in North Carolina. So about that spending. Now is a really good time, since we are 8 days into the month of June, to look back on May. By now, you have probably gotten an email from your bank that says your bank statement is ready, and the month is over. All of May is done, so it's not a bad idea to take a moment now-ish, and look back on May and just see what May looked like for you. The numbers I would suggest that you pay attention to are these four I've presented on the screen. The first number is your cost to exist as a human. Now, most people are spending less than normal right now, and that could be true for you as well. One way you might want to look at this number is look at the money that left your bank account. I don't know if you look at your bank statements closely, but at the very top, before it gets into all the details, it'll show you your starting balance plus any cash that came in minus any cash that went out during the month, and then it'll give you your ending balance. Now, cash isn't always a perfect approximation of what it cost you to exist as a human or a business owner during the month, because maybe you paid June's rent before the end of May or something like that. So there could be some timing issues. But I would encourage you to get a sense of how much you spent to exist as a human during the month of May. And if you want to drill into the details, that's even better. But if you have a sense of a general rule of thumb, like in general, it costs you, say, $4,000 to exist as a human in any given month, having that sort of anchor point in your brain means you can quickly glance at your bank statement and see if your number was higher or lower than that, and then see if you can understand why. Maybe you booked a trip, or maybe you went out less because everything was closed during the month of May, right? There are usually logical explanations for why there are any differences, but you can take a moment to sort of understand what those differences may be. And then I would do the same thing for your business spending. So what does it cost you to exist as a creative business owner on a regular basis? Specifically, what did it cost you to exist as a business in May? Maybe you had supplies, maybe you had subscriptions, maybe you bought a new Zoom subscription since all of your meetings are on Zoom right now. Maybe you had website expenses, any types of things you may have had to exist as a business. If you've got them in their own business account, that's pretty easy to identify. But if not, you can spend some time kind of digging into your own details. Again, if you've got a good sense of what your normal number is, you can just quickly spot check it from month to month to see how it's moving. The other two numbers I would pay attention to, or at least check in with about once a month or so, is your total savings balance. So how much did you add to your savings balance, or how much did you spend from your savings balance during the month of May? If you are one of those people that has been severely affected economically and you don't have any money coming in right now, you're going to be spending your savings, essentially drawing down your emergency reserve fund. That's what it's there for, right? But it's good to know and watch that that's what's happening, just to make sure you're aware of what's going on. So a quick way to kind of check in on that, if you have a separate savings account, you can simply look at the change from April 30th to May 31st, and you can see if your balance went up or down. If your savings life is a little more complicated, you can look at any money market accounts you may have, any mutual funds, any retirement accounts. Although I would caution you, don't check in with your retirement or your long-term investment accounts every month, unless you just really want to know what's happening. I think checking in with those balances on a quarterly basis or every 6 to 12 months is perfectly fine if retirement is a long time away for you. And then I would do the same thing for any of your debt balances. Depending on how everything has affected you, it is possible that your overall debt is going up. Maybe you are spending money on credit cards, but you're not fully able to pay them off each month because of cash flow purposes. Or maybe you have paused repayment on your student loans, right? Which is something that was an option under the CARES Act. So you would see those balances staying the same or going up depending on what kind of debt it is. So again, if you look at what the balance was at the end of April and what it was at the end of May, that's a good way to just quickly spot check, is your debt going up or down? And that's a good thing just to keep in mind. So we're looking at spending for human purposes and business purposes, and then savings, is it going up or down and why? And then debt, and is that going up or down or why? It's not a bad time to check in on those numbers and look back at the month of May, now that the month is totally over and you've got a second to go ahead and do that. Couple more questions in the chat. Elder loan. Elder loan, maybe can you pay your dues out of that loan? Oh, the EIDL. Okay, that makes more sense. Okay, so your EIDL loan. So remember, the EIDL is a separate program from the Small Business Administration, and your EIDL loan has so much more flexibility than PPP. So you can absolutely pay dues out of that, Zoom subscription, any ordinary and necessary business expenses you can pay with EIDL loan proceeds. I will remind you, though, that EIDL is not forgivable. So that is a loan that you will pay back. I think technically you have 30 years. I wouldn't recommend paying it back over 30 years. I'd maybe model it out over 10 years or so, maybe even 5, but the interest rate on that is super low. So you can use that for any business purposes. Yep, you can use it on your lawyer, you can pay your accountant, you can do whatever you think would be useful for your business, but just make sure it is a business expense. And again, that's up to you to document that it is ordinary and necessary, helpful and appropriate for your business, which is some pretty wide latitude there. Okay, so today we talked all about the updated PPP Flexibility Act that went into law on Friday. We talked about unemployment updates. I would predict that many more states will be asking people to reapply for unemployment to get that extra 13 weeks, because in at least Arizona and North Carolina, it does not seem to be automatic. So pay attention to that if that affects you. And then, of course, we talked about Arizona and North Carolina, the 2 states that I had forgotten to fill you in on last week. And then we touched base quickly about your spending, and that's not a terrible thing to be looking at from May right now as you continue to increase your overall financial mindfulness. It has been wonderful spending a little bit of time with you today. Thank you for all of your great questions, all of the messages in the chat. I really appreciate it. And I wish you well as you continue to prioritize spending your time and your dollars and your resources on things that really matter to you. There are really good things you can and probably should be supporting right now if you are able to do so. So thanks for that, and I will look forward to seeing you next Monday. Keep those questions coming. Bye, everyone.